Welcome to the Cannacurio Podcast, powered by Cannabis Media. I'm your host, Ed Keating, and on today's show, we're joined by Guillermo Rodriguez. He's Virtual CFO to the Cannabis Industry. He's been in the accounting space for more than 20 years and has occupied many diverse roles, from in-house corporate positions to also being a self-employed consultant, and he currently serves as Virtual CFO at Summit Virtual CFO by Anders. So Guillermo, welcome to Cannacurio.
Thanks for having me, Ed. Appreciate you having me on.
Absolutely. So question we always ask everybody is, how did you wind up entering the cannabis industry?
Well, I wish I could say, because I wanted to make a lot of money and everybody welcomed me with open arms and was like, come on in, let's get going. But as you know, and many others in the space, it's a tough space to wedge your way into. But no, my background, as you mentioned there in the intro, is in corporate. You know, I worked for a really large construction and engineering firm for about 15 years throughout my career. And I started off as an accountant, doing financials. I was on the other side of the earnings calls. Like right now, the big news is with, the MSOs, and they're disclosing their tax position and all these things. I was on that side, preparing those answers, the script, the presentation. And so I did the accounting piece, the historical financial information, for the first half of my career. And then as the company I was working with, we started to grow, we were looking to make strategic acquisitions. And so that's when I moved into more of a corporate finance role, a forward-looking role. That's what we do as virtual CFOs, is help, look into the future through forecasting to make better financial decisions. And so I loved it. I did that for a few more years. But going back to what I mentioned earlier and being on the earnings calls, I think I had done, they're every quarter, and I added them all up, and I've done this many earnings calls. And I said, creativity's always been, I think it's our nature, and then I just thought, like, this isn't the best environment for me to use my creativity to really help people, to really help companies. And what I wanted to help with is profitability. I mean, I think that's what I was made for and trained for, is to help companies be more profitable. And so I went into consulting. I mean, I think that's when I had the moment where I said, I've done enough of this. And I went into consulting, as you said there in the intro, working in companies of all sizes, from public companies to middle size. And through that, COVID period, one of the reasons that I decided to leave is I was with an employer, and just the response with the pandemic wasn't very, health related. It was just around being 6 feet apart and things like that. And I said, we really need to do something to improve our health. I saw people dying from, with comorbidities and things. And just on my own personal health journey, I knew that plant medicine was a big part of health, by reducing stress, sleep, all these symptoms that are more preventative and would put you in a better place to survive anything like a pandemic, like what we went through. And so I just said, as maybe later we'll go into what a virtual CFO does. A big piece of it is being in a niche, being in an industry. So at that point, I decided I want to kind of narrow down, and I decided cannabis would be a great one because of those reasons. Health and wellness was my passion, but also because there was a lot of need around improving profitability, the tax situation, which I'm sure we'll get into. I thought it'd be a great space. A few years later now, I'm like, it's a lot tougher than I thought, but that's really what led me into the industry. And now as a virtual CFO with Anders. Yeah.
Well, that's a great journey. Great journey. So you touched on this a little bit, but maybe you could help our listeners know, what is a virtual CFO versus a fractional CFO, and how much does this cost? Like, how does this get built out, or how do companies account for it?
Sure. So we've seen more and more outsourcing of accounting functions over the years. It's happening more and more, and more accounting firms are now offering the advisory piece. Clients are looking for not just do my books and my tax return, but I also want to meet with someone monthly or weekly and look at my historical results and determine what I need to do to improve my profitability, how to set my goals, where should I be financially?
Mm-hmm.
And that's what a virtual CFO does, is we really get in there, understand the client's operations and business model. And then through forecasting, which is the foundation,
Mm.
and setting clear metrics that we can measure and predict revenue, we start an advisory relationship, a consulting relationship, where we're keeping the ball rolling and helping our clients get better and better, closer to their goals of profitability and improving cash flow over time. But it's a kind of a day by day, and there's really no shortcut or magic formulas. It's daily decisions based on data, metrics, and information that we help our clients with. And we use what we call it's a subscription based model,
Oh
where
yeah.
a client will come to us, or that's not a client yet, or maybe a prospect. We'll discuss their situation, how many people they have on their accounting staff, and they'll look through our options, and they can basically choose, like, do you want us to do your payables, your financials, the advisory piece? And that way the client can really pick what they need, as well as set it up on a fixed price basis. That way,
Yeah.
you don't ever want to worry about hourly charges or anything like that. You're just getting the best use of our time and our team to work together to help you meet your goals.
Well, it's interesting too, because what you talked about before when you started in accounting, and I remember this from business school, where things like that are backward looking as opposed to forward looking. And obviously, as some have said, there's a reason why the windshield is bigger than the rear view mirror. I mean, we have to see where we're going. So that's got to be a big help for people. So one of the questions that I had as I was reading through and preparing for our time together is, as you look across the cannabis value chain, everywhere from grow to manufacturer to, retail, do you come across any universal challenges your clients contend with, that sort of cut across maybe more of the value chain than just what a store has to deal with or what a grower has to deal with?
I think by far it's not looking forward with actual numbers. I think it's really a lot of decisions without really understanding the cash impact of
Yeah.
these decisions. Um, when I said, well, maybe I hadn't said, but retail, cash equals sales. Cash is coming in, sales equals cash because it's at the point of register. But you have a lot of other pieces in the value chain where you really got to get an understanding if you're receiving an advance payment, or maybe you see revenue on your books, but you don't see the cash yet. Maybe you're spending money you don't have, or maybe you don't know how your cash flows are gonna come in. And so that's what we do through forecasting. And that's pretty much a universal question and a universal problem. That's
Mm,
like, I don't know how much cash I should keep on hand, and I don't know how much cash this represents. Like, if I were to have a downturn in the business, am I good for 3 months? Am I good for 2 months?
yeah.
If I open a store, how much cash is that going to take up? And so I think the problems that I see are just very much around just visibility into, I have this business plan, but I don't have the
Yeah.
financial visibility around that.
Yeah. Yeah, that makes sense. I was at a conference a few weeks ago, and it was all about data, and it was a great deal of discussion about the challenges at the store level, sort of going toward the retail end. And one of the speakers sort of had a consistent theme, and he just reminded everybody that carrying too much inventory is just reminding folks that you're tying up so much of your cash there. I mean, he sort of equated it to debt. He says,
Mm.
you've got 8 months of this product. You don't need to carry that much with you, and as a result, you don't have as much free cash flow, et cetera, et cetera. So it was interesting to really see it called out, and almost sort of like in an accounting language of, it's debt in a way, which I thought was pretty interesting.
Yeah, and I think those are the type of things that I had a client come to me the other day, and it's like, well, I have this plan, uh, but I don't really understand how the cash moves through the business, right? And the
Oh,
inventory is a great example. Is that, through setting metrics, you may have a great month from a profitability standpoint, but you bought a bunch of inventory at the end, and then you're kind of confused and like, why isn't my cash up? My profitability looks good. I made a lot of sales, but my inventory is high. And so that's the kind of things that, the accounting mind can kind of help decipher through. But the challenge is not just understanding it as a CFO, is really being able to communicate that in real simple terms to where
Right.
the client finally understands it and then can be more empowered to make decisions in the future
Right. Like
and set the goals. Should it be 15 days or 30 days? When does it make sense to do 30 days? Sometimes it does, so you don't miss opportunities, and talking through all those scenarios.
Oh, great. Yeah. Well, it's sort of like it helps people, I think, understand which levers they can adjust as opposed to just running it sort of month to month, or like, oh, how much money do I have in my bank account, as if that's enough of a metric, because it's not. So interesting. Now there's a number of big topics that are kind of financially related that I wanted to touch on, and they're the ones that we've been hearing about almost my whole time in the industry. So let's start with one of the big ones, which is managing 280E through the value chain, which I understand is one of the things that you obviously have to do. One of the questions that I had in terms of 280E is, how is that different for cultivators, manufacturers, and dispensaries? Because I think it ties into cost of goods sold and other things. And maybe you could explain it in a way that we all could understand.
Yeah, the super short answer and the very simple answer is that 280E disallows uh, ordinary business expenses, right? But there's a piece of the tax code that allows for uh, cannabis companies to deduct their cost of their inventory as a return of capital. And so all that to say is, if you can go through the accounting process to identify what costs are related to your inventory to producing the final good,
Mm,
you can go through an exercise analysis of allocating those costs and then therefore deducting them. Now, you don't want to do this on your financials because it gets very confusing. It's just something that's done separately for tax purposes. That way you can understand what your margins are, what your true profitability is. And so for cultivators, there is most of the cost goes into producing flower, right? Because you have seeds. Most of the personnel are watering plants, working. Uh, you have a grow calendar or a flower calendar. Let's just say over 60 days or however long. You're really tracking all that cost
yeah.
from inventory to work in progress to a finished good. And then once you identify all those costs that are attributable, you still can't deduct it. You got to wait until you sell it. And so once you sell the product, then you can allocate those costs into cost of goods sold and get a tax deduction. But
Wow.
even for a cultivator, there's still going to be overhead costs that are non-deductible. Your CFO, your service providers, they're not directly involved in producing the final good. So that process is very similar for a processor that's taking flour and manufacture
Mhm.
into whatever it ends up, different thousands of SKUs,
Right.
and it follows a similar process, right? But there's still a bucket of costs that are non-deductible. Now, for a dispensary, a retailer, there's hardly any costs that you can push up for tax purposes other than the cost of the product itself. So you're buying flour or different form factors, different categories. All that inventory is cost, and that can be deductible. But anything that's overhead and outside of that is non-deductible. So all that to say is that we do a lot of benchmarking with
Mm,
clients. So we say, okay, retailer, you have, well, let's see, let's just break down an income statement, just in real simple terms again. Take your revenue, any discounting that you do, the cost of the product, the overhead minus the overhead is your profit before tax.
yep.
A good number, a good standard for industry, regardless of the business model, is somewhere around 15%. So if you look at all the non-deductible costs and say those are 30% of your revenue, uh, you're looking at an after-tax profit of maybe 1% or break even. And this is for a cannabis company and operator that's doing really well. And so like you do really well and you may still not generate cash after tax, or you may just be at 1 or 2%, whereas a normal business would be 7 to 10% after tax profit. And so it becomes very difficult long term to manage a business this way, right? And so some kind of reform has to happen. This has to go away for the long term health of the industry.
Yeah, absolutely. Well, I think that's a good tie into the next topic I wanted to talk about, and it's one that I know you focus a lot on, which are, KPIs. Like, which KPIs should cannabis businesses be focused on? Because that's typically some sort of data based metric that allows operators to track how we're doing compared to peers, et cetera. So how do you help businesses come up with them?
So it's pretty standard. We think about KPIs in terms of how they may help, leading indicators, how they're going to help you look into the future. And we look into 4 buckets. One of the buckets is actually historical, and that's your financials. So we look at how much cash you should keep on hand. So as a percentage of revenue, that way, earlier to my point, you can look at, okay, how much cash does this represent? You can sleep at night knowing that you got 60 days of cash. After that, you're out. We got to find new ways and new solutions if we see a change. What should your gross margin be? So your cost of your goods, revenue minus the cost of the goods, right? And so let's just say anywhere from 40 to 50%. And then overhead, want to manage that overhead as a percentage of revenue to set a target for where your net income before tax should be.
Yeah.
But that's all just benchmarking. Once we determine where we want to land there, what that will mean in terms of how much cash that those metrics would generate, I want to say, how do we get there? And the way we forecast is by looking at basket sizes. Basket size on average, and that metric simply means your revenue divided by your number of transactions.
Yep.
And that will give you some insight into, are you selling more items, less items? Is the price per item coming down? Okay, now we look at discounting. Is that what's affecting it? Different market. So we really want to analyze that, and it'll be different for mature markets versus emerging markets, of course, and then down by your region and number of transactions. So if you really multiply those things, that's the revenue for, say, a retailer.
Yeah.
But and then that helps give us some insight into where we're spending our marketing dollars. So then that brings us into the other piece of the metrics, which are the customer metrics and the pipeline metrics. And that's where you get into more of a forward-looking, being able to forecast with more certainty. Because back to your point earlier about inventory, right? Those are the type of things that you can say, okay, I want to sell this much next month, but I actually don't even have the inventory to do it. So, there's always information you can look that will let you know what you can actually do in the future. So maybe you say, okay, I need to buy more inventory. But those customer metrics, like your customer retention rate or the lifetime value of your customers, that's what really allows you to forecast with more certainty, so that we can set targets for acquiring new customers. Okay, now we know how much does a customer actually purchase over a lifetime, right? And then we can start to employ more of the marketing strategies around upselling and cross-selling to try to get that basket size up, that profitability up, and make those small tweaks in day-to-day actions to drive the bottom line.
That's a great point, and I like those sort of SaaS metrics of lifetime value and how that plays in. One of the things that we always talk about here at Cannabis Media internally is trying to forecast in such a volatile industry. The point that I've been making, that my colleagues quote me on, is that you can't look at last year's performance to judge how this year's performance is going to be. It's like every year in cannabis has been different, and we've been at it for basically a decade. And looking back at how we did 3 years ago means nothing to how we're doing now, really. I mean, yeah, there's a renewal component of our business, but so how do you forecast when it looks like it's not predictable, unless maybe it is on the plant touching side? I don't know, but I'm curious. Is forecasting a reliable tool in such a crazy market.
It's certainly accurate with the right inputs, right? If this happens, this is where cash is going to be, right? So we got to start there. And then if market's changing, will we change that forecast, right? I've never seen a budget, a forecast, a plan that actually plays out exactly as planned, right? And
Good point.
sometimes it does. But what the forecasting does is, first of all, it allows you to accurately look at the levers and be able to adjust. And so we know if we sell this much, we'll be here. We know if the market, we know if the market is trending down in terms of consumers, if we lose market share, this is what's going to happen to our basket size. This is where we need to be to achieve this margin and this cash. And so it's to me, it's the only tool to be able to make financial decisions and to be able to look into the future and improve and pivot regardless of what the market will do. And so that's how I look at that. But what it does is it really allows you to look back and say, okay, this is where we started the year. Maybe what did we not forecast? We didn't expect this consumer base to grow. We didn't expect as a state to legalize rec, and it took out some consumers from our market. Whatever the case may be, is like, I think that's what it really allows you to do, is to look and see what can you learn to keep getting better at this and to predict where you're going to be.
Got it. Now, one of the other big topics, and this is almost it's really an industry issue, and we touched on a little bit earlier, is taxation, but specifically some of the tactical, strategic ploys engaged by Trulieve and now others following in their footsteps to try and sort of, well, I don't know, is it restating their financials to say, hey, this is cost of goods sold and we want a refund? I mean, sort of what's the skinny there from your professional perspective?
They've been very tight on sharing information about it, right?
Yeah, trade secret is what I've heard.
Trade secret was the most blatant, where it's like they didn't spend too much time figuring out how to say that, basically saying they don't want to say anything. But I've spoken to a few attorneys that are involved in some of these tax positions that you're seeing now. And one of the predictions that came true was that I don't think it's a trade secret, because you have other MSOs that, right, I guess everybody knows the secret. But the prediction was that if Trulieve was successful, and I had this conversation prior to the announcement, is that you'd see all the other MSOs following on. And so that's exactly what's happened, is that now you see other MSOs that they're sharing a little bit different details about it. Some are saying that they are going to continue to make their estimated tax payments as if 280E has gone away. Some are saying, like Trulieve, I don't think they really disclose how much was state versus federal. So
right,
there's that to look into, is that we don't really know. And so, but my prediction is that there is something to it, because you have so many of the MSOs that are moving forward with it. But some of the questions, being on that, I've been on that side of it before, not in the cannabis space, but you hate the questions from the analysts, stuff you don't want to answer. And you can tell in the tone of how, some of these executives have answered the questions, and a little bit irritated when they ask, well, what if the IRS is successful? How are you going to deal with that? That situation, right? If all these MSOs are not successful in this, because it could be contested, and I think that's why it hasn't been disclosed, right? Because it's not certain. And then you get answers like, well, we'll deal with it with like any other taxpayer, and we have great cash flow. But we know that a lot of these companies don't have great cash flow. So it's got some level of risk, but it's been analyzed. So I think all that to say is that there must be something to it. But I think there's still some risk that it could be it could be reversed out. Otherwise, you would see a lot more information on it, and it's not a done deal.
Yeah.
But
Yeah.
I think what's interesting is that when we talked about the reschedule, is Whitney Economics has done that study that says it's an extra $1 billion in cash to the industry, this year
Mm.
or next year, if for those who are with making estimated tax payments. But this new situation is 3 years of amended returns, so it's 4 times that amount of new cash coming into the industry. So it's very significant. It's very meaningful. It's more meaningful than anything we've ever seen from a cash standpoint,
Yeah.
and something
Right.
that could help. And so we'll see. There's some interesting articles out there on MJ Biz by some of these attorneys that have worked with these clients and done some of these amended returns that feel very confident. Some have even stated that they've passed IRS audits and things like that.
Wow.
And basically what they're saying is that there's an old case you can go back and look into that states that 280E doesn't mean that those expenses are disallowed, forever. They've essentially captured them and can deduct them in the following year or in future years, because what 280E says, if you read it carefully, it says in the current year, I believe. And so
Oh.
it says those expenses are disallowed in the current year. It doesn't ever say in
Is it like
future
a carry
years.
forward expense, if there is such a thing, like a carry forward loss?
It's an asset, and then you can carry forward into future years. Yeah. So I don't know if they're offsetting it or offsetting the loss in future years. That I think
Ah,
that will come out in exactly how it's being applied. Um,
yeah.
but
Guillermo, I started my career at a tax publisher back in the 80s, and I'm sure those people are going crazy on this stuff, sort of delving into it and writing about it, because it's a fascinating topic, and
yeah,
there's a lot of art, magic, whatever you want to call it, in interpreting these kind of things. So
yeah,
we'll see how that one plays out.
that
But thank you
that
for the
must have been a
background on
fun
that.
job.
Yeah, yeah. I was more on the securities law side as opposed to the tax side,
Yeah,
but yeah, definitely nerdy. So
yeah,
now one of the other regulatory areas, and this is, I think, sort of outside of, let's say, banking, finance, maybe it's more treasury, but any views on safe and safer banking? Like, is that something that really touches your area on the CFO side, or is just one of those things that we have to keep an eye on as it may impact, part of the, maybe cash management or other, elements in the financial arena for these companies?
yeah. It's certainly more long term than this
Mm,
immediate impact of the reschedule or these amended returns, and the more the tax side and the 280E that we're saying. I mean, that's immediate cash flow. Where I think safer banking now is more impactful is that you would see more banks entering the space, could be more lending, but I think it'll trickle in. And so there's not an immediate impact in, you know, more debt lending or more line of credit for the industry overall. I think there'll be an increase, right? The other piece where it's very meaningful is if you have branded credit cards entering the space,
oh, yeah.
because that increases basket size, that increases spending and profitability. So it's a game changer, and we know that consumers who have been using like AeroPay and some of the solutions, they spend more. um, but again, I think that's not immediate, because at the same time, a lot of these companies will have to evaluate whether they even want to be in the space. So they'll, even if there is a complete uh, a reschedule, some companies still won't want, some of the credit card companies, the branded credit card companies, they still won't get in, And then there's this kind of already ingrained behavior in cannabis consumers that a lot of them are used to spending cash, and so those behaviors still will take time to change.
Yeah,
Um,
yeah, yeah. That's
and
true.
so I don't see an immediate kind of impact. And also, there's a lot of great banks that are already banking cannabis. We work with some, and they just do a great job with the relationship and treasury, the treasury side of things. But there's more fees and that thing. So some of that would help the companies, but I just don't see it as an immediate impact. plus it's just a sore subject. Like we keep thinking we're going to get somewhere, and this year was the year and it didn't. So I think that's why we're all just kind of like, well, okay. I mean, at least from my perspective, I've kind of just put it on the side because it's just such a thing that hasn't moved forward when we are so
Yeah.
certain that it will.
Well, right. And then, you talked about, people exiting the industry, which we're seeing a lot of. And so this is the question that, I sadly ask everybody toward the end of these interviews is, has the industry hit bottom yet? Or, we're still in the valley and we don't know when we're going to come back up. Any thoughts or guesses on that?
I think bottom in the sense of, seems to be like markets have matured, and hopefully we've learned what we've learned from the mature markets, and
Mm,
investors have left and kind of are looking at more fundamentals.
yeah. Yeah.
And so it's almost like it's pushing things out, it's consolidating, so that all what will be left is companies that are using data, looking at metrics, that have a sound business model, and maybe some consolidation is good for the industry, so there's more profitability and cash flow back into the business. So I don't think we're headed down. I think we just learned too much already. There's too much information around what it takes to be profitable, about what works and what doesn't. But you
Yeah.
still have a lot of companies that are heavily discounting to keep customers, to keep market share, and it's not going to. I mean, it's obvious that's not going to work long term. So
Right.
it's
Not
just putting
sustainable.
business. It's not sustainable
Yeah.
whatsoever. Yeah.
So finally, any other trends you're looking at? Like, I just sort of going back to the very beginning, the fact that you have a virtual role is something that past guests have talked about who are in the HR space. Of there's a lot of that in the cannabis space where there's gig economy, there's virtual, there's fractional. So that's sort of one trend on the labor side of land, labor, and capital. Any other trends that you're keeping an eye on, Guillermo, that you'd like to share with us that we should also pay attention to?
I think one trend, more industry wide, is just like we got to see how the hemp space is going to merge with cannabis. I mean, that's just a trend. I was just in Missouri for a MoCan event, and speaking of trends, there was two big trends. One is what you mentioned, is the consolidation that's happening.
Yeah.
And the MoCan president did a slideshow, and he kind of put the numbers up. This is how many licenses we have last year, and entities. This is how many we have today. So you're seeing more consolidation, and that's pretty evident even in new markets. So I think that's going to continue to happen.
Yeah.
Um, why that's relevant is if you're a smaller operator, how you're going to manage your business, or build a more valuable business for these next few years is something to look out for. and then secondly, there's an initiative. There's in most of these states, California and here in Missouri, of how the states are treating the hemp market, right? And
Yeah.
so uh, it's largely unregulated. I think it'll continue in Texas. We're kind of wild over here, but in some of these states, they're trying to bring the hemp market into the existing uh, cannabis program, and so I think that's something to really watch out for, and we'll see what happens there. But
Yeah. Agreed.
from my standpoint as a virtual CFO, we're seeing just more companies that are looking to access talent, the advisory service, and for our profession, I mean, it's just a topic, is like we're talking about how to continue to grow the consulting piece, because that's what clients are really wanting, is really the relationship. And so the trend is, like, as accountants, we got to move towards being more relationship technicians, right? Not just the
Yeah.
numbers and the technical, but really how to be relationship people.
Excellent. Excellent. Well, Guillermo, thanks so much for joining us today. It's been a great and informative discussion.
Thanks for having me on, and have a good trip. I hope to see you at the next conference. Maybe we can meet up.
Absolutely. Absolutely. Well, I'm your host, Ed Keating. Stay tuned for more updates from the Data Vault.